Yeah. So, hi everybody. Welcome to Web Series 27, hosted by Board of Internal Audit and Management Accounting. So, the topic for today is safe from start and leveraging internal audit in fraud and risk management. Yeah. So, today we have with us CA Manoj Agarwal. I would request everybody to welcome Mr. Manoj Agarwal, and I will, welcome Manoj sir.
Thank you.
Yeah. So I will speak few words about Manoj sir. So Manoj sir, he's a leading internal audit and risk management department. He's leading this department in India's largest specialty of footwear retailer. He has over 20 years of experience in delivering assurance and advisory services to management in retail, facility, BFSI industries. Prior to this, he was heading internal audit and risk management of an Indian operations of ISS and was a leader of IT and ITS vertical of A&B Consulting. And he has held a lot of commendable positions, like he had been a course director of enterprise risk management for ICA in the year 2010, and also a committee member in industry of WIRC, and presently sir is a president of ACIIA. It's a federation of over 19 affiliates with 60,000 plus internal audit professional across Asia, and he's a secretary of IIA India. Yeah. Manoj sir loves to write blogs on risk and controls, which are available on LinkedIn. And his blogs were also published by ISACA and IIA. In terms of his education, sir has done his FCA and DISA from the Institute of Chartered Accountants of India. He is a CIA and CRMA from Institute of Internal Audit, IIA, and as well as US. He's a CISA from ISACA, USA. And I would now request him to start the webinar. Yeah, sir. Over to you, sir.
Thank you, Rishuji. Thank you, Arun. Thank you, Javir. First of all, thanks to ICI and thanks to Board of Internal Audit and Management Accounting to give me this opportunity. It's always a pleasure and honor to speak on the C Institute's dais. So just give me a moment. I will share my screen. Great. So thanks and welcoming me to this webinar. So this has been already been covered by Rishuji, so I will skip this. This I generally keep so that people know when they read the PPT that it belongs to me. The first thing of the first item on my agenda is my personal risk management. So all the contents of this presentation constitute the opinion of speaker, which is me and mine alone, and they do not represent the views and opinion of my employer, my supervisor, nor do they represent the views of the organization, business institution where I was or is part of. Some of the situation I mentioned may not be true, and identities of the parties involved may have been disguised, and images used are subject to copyright. So with the personal risk management has been taken care, so let's dive into the details. You can feel free to ask me any question at any point of time. You have been given that facility. So and I will try my best to explain anything which you would like to do. So when it comes to the fraud, this is the famous fraud triangle as given by Donald R. Tracy. This person was based in America and he was one of the founding member of the Association of Certified Fraud Examiners. So when he has done the research, he has put three items which constitute the fraud triangle, which is pressure, opportunity, rationalization. Pressure, motivation, and incentive to commit fraud. Opportunity, the knowledge and ability to carry out fraud. And rationalization, justification for dishonest action. So the opportunity, knowledge, and ability to carry out a fraud. As an internal auditor, I am of the opinion that even if someone is willing and wants to commit a fraud, our controls should be such robust that the person should find very difficult to commit a fraud. And that is where this opportunity triangle comes into picture. So if there is a pressure and there is an opportunity, then there is a chance a fraud can happen. And when a fraud is being committed, the person also realizes that I deserve this, I need this, no one is taking care of me, I will pay back. So there are so many things. So this is the fraud triangle. So any fraud involves one or more this factor. Why internal audit or internal auditors? Why we are discussing the role of internal audit in fraud risk management? Some may have the opinion that internal audit has no role in the fraud risk management. I have a contrary view for very simple reason. The regulator demands, the various law requires, the standards required us to be involved into the fraud risk management, and of course, public expect us to be involved into fraud risk management. So I will take each one by one. Fraud and regulations. We all know Companies Act 2013, Section 134(5), subsection E, explain internal financial control, that various other things. It also includes an item called the prevention and detection of fraud and errors. So the law expect internal financial control of such that it allows one, prevention of frauds, and in case a fraud has been committed, then detection of fraud. Is 100% of the fraud will be detected is a question mark. 100% of the fraud committed can be detected, again is a question mark. But having said that, it requires internal financial control so that the frauds and errors can be prevented and detected. So if you are a statutory auditor or you are an internal auditor working in a company which is subject to Section 134, subsection 5, clause E, then you need to ensure that during your course of verification of books of accounts or your control, that the controls have the ability to prevent and detect the fraud. So that was for India. A similar condition also exists in SOX section 302, which requires CEO and CFO to report any deficiencies in internal accounting control or any fraud involving the management to the audit committee. So the law requires us, regulators requires us. Our own ICS, Standard on Internal Auditing 11. My apologies, I have not updated the revised number. So it has various sections, for example, paragraph 3, knowledge and skills to identify indicators of fraud. Paragraph 4, reasonable knowledge of factors affecting fraud. Paragraph 15, evaluations of policies and procedures to identify and assess the risk of fraud. Para 19, communication of fraud to the board, and para 20, documentation of fraud risk factors. What is this all this about? So as an auditor, be it internal or statutory auditor, we need to know the business of the client to whom we are performing that engagement. Now, what is that requirement? That we should have knowledge and skills to identify indicators of fraud. Can I say my scope doesn't cover fraud detection? No, you can't say. Reasonable knowledge of factors affecting fraud. So they need to know what circumstances a fraud can be committed. Now, after an engagement, you can't say, "Ki, I don't know that there was lack of segregation of duty." You're supposed to verify that. Evaluations of policies and procedures to identify and assess the risk of fraud. So whenever you do an evaluation of policies and procedures, so you need to see that whether it gives a possibility of committing any fraud. That means it can be interpreted in more than one way, and one of the way can be as per the management. And so if fraud happens, and we need to report to the board, and whenever we identify any fraud risk, we need to document it, and we need to also document that with this fraud risk, what are the controls in place, what are the policy procedures is there, which will be able to take care of this particular risk. So just like CA Institute standard on internal auditing, there is also standards, international standards on internal audit. Now it has been called the Global Internal Audit Standard. It also have the similar thing. For example, one of its requirement is sufficient knowledge to evaluate the risk of fraud and the manner in which it is managed. That is, they have the knowledge in which a fraud can be committed, and not only that, they need to also know and understand that what can be the right control to mitigate the fraud risk. Probability of significant errors, fraud, and non-compliance. So whenever the internal audit program has been made up, in fact, even for statutory auditors made up, they need to incorporate the test assuming that if fraud is being committed, a fraud can be committed. So they need to specifically test, for example, segregation of duty. So they need to check whether there is a segregation of duties there or not. It can be on paper, it can be in the system, in the manual system, whether there is appropriate maker checker is there or not. One of the requirement is reporting must also include significant risk and control issues, including fraud risk. So whenever any report has been made to the management and the board, so besides whatever they are auditing it, if they believe that something is there which gives rise to fraud risk, then they are supposed to cover that as part of that reporting. Of course, when they need to cover as part of the reporting, they need to also ensure that the same has been covered as part of internal audit program testing. The internal audit activity must evaluate the potential for occurrence of fraud and how the organization manage fraud risk. So one is the auditor, when they get appointed, they need to have a knowledge, but at the same time, when they are performing the internal audit activity or they creating the program, they need to evaluate the potential for occurrence of fraud, and they need to also, while doing the testing, they need to ensure that the fraud related risks are being tested. Now, if there is no control, they can't say no control, no testing. No, no controls is if no control is there, it is a still reportable observations. So when you compare both of them, you will realize that the whether it is C Institute standard, whether it is a global standards, they both talk about that auditors need to have knowledge how a fraud can be committed. They have a knowledge how the fraud can be prevented. While creating a audit program, they need to incorporate steps for testing whether the fraud has been committed and whether the fraud can be detected. And they need to always consider that fraud may be happening. So they need to do that specific testing. And all this is required to do to ensure that you don't fall, you don't create a, you're not on the wrong side of the regulations. So this is the internal control framework as given by COSO 2013 framework. So it has five elements: control environment, risk assessment, control activities, information and communication monitoring activities. See, all this talks about the control environment within an organization, what is the role of risk assessment in the entire control framework. Based on this risk, the control activities need to be performed, and there has to be communication, and somebody need to monitor. So in the risk assessment, as part of the internal control framework, one of the principles is Principle 8 that assesses fraud risk. So if you want to implement a internal control framework, which you have to do as part of the internal financial control framework, and while laying down all the documentation, you need to also specifically assess the fraud risk in every business unit, in every process areas, in every activity, sub-activity. You need to assess the fraud risk. Now, again, what I've done, I brought the fraud triangle and added something. Now, what is the perceived opportunity? Perceived opportunity is wherever an individual feels that the internal controls are weak, or they believe that the controls are there, but no one is monitoring, or monitoring is not happening in right manner, are assets susceptible to fraud. For example, when you're taking out any goods, no gate pass has been prepared. So you can take out any goods from the company or organization. What is the perceived pressure? Pressure is the greed, addiction. For example, somebody has a habit of, let's say, gambling, or for example, even stock market. They are addicted to the future option, and they incur a loss. So there is a huge pressure. They need to make up that loss. Somehow they need to pay back that loss. You may have a very poor credit rating. For example, you may be holding multiple credit cards, and you are not diligent enough to pay on time. Of course, for a simple reason, you don't have money. You are spending too much. Your 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 employees or one person is feeling that he is getting paid less. Now, this is quite common. Of course, it doesn't mean that the well-to-do people are not doing the fraud. They're also doing the fraud. But typically, there is a dissatisfaction with the pay. There is a sense of entitlement. See, all those things create a risk of fraud. And in my opinion, the role of internal audit is at two area, which is perceived opportunity, weak internal controls, and perceived pressure. Now, why I included perceived pressure is this is something we can test. For example, who has not been given promotion, they say for even not a single promotion in last 5 years, or what is the average duration in which a promotion has been given vis-a-vis who are the outlier who has not been given for a long period of time, who has not been given increment for a long period of time or less increment. Credit rating, we can ask for a CIBIL score, we can get a CIBIL score, which gives an idea that uh, what is the risk. Of course, just because a person's having a weak CIBIL score doesn't mean that the person is liable to commit a fraud, but your risk increases. So here is a screen which gives the which gives the business fraud risk framework. So here I have added a number of areas categorized into board, management, employees, supplier, customers, and how a fraud could be happening. Let's take board as an example. There can be a conflict of interest. Now, if you are keeping an eye on the stock market, you will keep hearing things. Some company where a CEO has some interest in a company and they ask the company in which they are CEO to buy the other company where they have the stake at some inflated value. Illegal political contributions, where sometimes political contribution needed to be given and how it will be given. They need to create something and then only they can give. Insider trading. Now it is so often getting misused. Smart people think that they don't be what the company won't come to know. Misuse of company assets. For example, a company has a pool of car and an executive keep a car for his or her own disposal for 24 by 7. Related party fraud. Now wherever related party transaction is there, there is a risk for a very simple reason. This who are the related party? They are related party because they are somehow connected to the KMPs, board of directors, and they are in a position to make decisions. And that is one of the reason independent directors and governance advisory frowns on the related party transactions. Security fraud. Now, few years back, a security has been given to few securities has been given to bank, and bank later on realizes that the company doesn't even own the security. Stock option manipulation. For example, a company can increase their share prices to get a better value, then do an exit. Your management, asset overvaluation. We have now the fair valuation regime. So fair valuation regime means assets is to be valued at fair value every year. Bill and hold. So you have billed. So you have billed to a customer, but you have not done the shipment. Channel stuffing, where you are loading all your inventory to a channel. If you have read the newspaper about 2 weeks back, the Maruti has taken a path-breaking step. They decided to report their sales based on the sales made by their dealers. So they are not going to report the sales which they have made it to the dealers, but they are going to do the reporting of the sale which the dealer is making to the end customer. And I believe that is the right way to report, and that is a one fantastic way you can manage the channel stuffing. Entity are off balance sheet. If you recall Enron, how the fraud has happened, they have created so many off balance sheet entities and items. Estimates and judgment. So estimate and judgment. So between you and your boss judgment, whose judgment will hold good? Of course, your boss judgment will hold good. Expense manipulation. This is so rampant. When big companies, people are doing expense manipulation. For example, they bought something for $800 and they simply add one. Why they are able to do add one? Because paper bill, financial statement fraud, fraudulent reporting, where they report something which is not there, data may not be there, inventory may not be there, holding periods open. So keep their periods open for extended period of time. Uh, no, I know about a company. So what they used to do, they used to hold the period open, and they used to look at their competitors' revenue, and then they decide how much accrual need to be done. Intercompany transactions, improper capitalization of expenses. Number of companies capitalize everything and creates assets. So the assets are there, expenses are not there, in revenue is there, improper charitable contribution. And the income tax is after this. This is the cashback, donated cashback, improper labor practices, investing or Ponzi schemes. So this is outright fraud, lease special purpose. This is what has happened in the Enron. Liability under reporting. This is also happened in one of the listed company which went to NCLT, has been bought by somebody else. So there are various ways the management can commit the fraud. Employees, bogus sale. Sale is not there, but they are recording the sale. And what they are doing, next month they reverse the sale. It happens both, large item and small item. Bribery, tampering, collusion, commission schemes. The company is running a scheme, employee to meet the quota, they do bogus sales, get the commission. After some time, they reverse the sale, or they reverse sale part, and get the benefit. Falsified wages, or ghost employees. Quite often, especially in remote locations, the person who is in a position of power, control, they will add to employees, and how we will come to know. Of course, today with the advent of Aadhaar card, we know that if Aadhaar card is not there, most probably employee is not there. But even if Aadhaar card is there, how do we know that employees actually there are not? Identity theft, lapping schemes, personal purchases. There's so many ways the fraud can happen. Suppliers, bid rigging. So your company is going for bidding, as thing reverse bidding, so that the price discovery can happen. But all the bids are coming from the same supplier, and how you will come to know? They are giving three addresses, say Bombay, Chennai, Delhi. How you will come to know? Of course, IP address can help you to some extent. Billing schemes. If your supplier knows that you have a big accounting system, then they can raise two times, three times, four times bills. Illegal gratuities. So they are giving some money to employees to get more order. Overcharging. Okay, your customer can do. For example, you would have all heard how the e-commerce, when you order, so from for the customer, for customer facing the fraud, when they order iPhone, they're getting the store, but vice versa. So if Flipkart, Mahindra, Amazon, they have delivered an SKU, an item to a customer, when a customer says, "Hey, give me refund," and they return the goods. When the goods have come, you realize that it has a stone. You're selling shoes, it has some different brand shoes, are used pair, are only one piece. So even customer can do the fraud. So these are the various, you can say the broadly the fraud risk can happen in the system. So what are the fraud related controls? So what I've listed down some fraud related controls, so which can help you, in your journey to assess things are there or not. Let's say external audit of financial statement. You would say, "Ki, this is so lame," but there are entities which are not subject to any external audit. If they are not subject to external audit, then they can manipulate. Of course, we have a GST regime, but still manipulation can happen. Code of conduct. I believe code of conduct is the fantastic way to control one of the most essential anti-fraud control. It allows an organization to specify what are the desirable behaviors, what are the undesirable behaviors, and this is something almost every company has it. Many companies has made it part of their employment agreement. Many companies has also made it part of the supplier agreements. Anyone who deals with the company, they need to adhere to the code of conduct, which covers numerous areas. So I believe this is one of the fantastic way of controlling, putting some controls on the frauds. Internal audit department. Having an internal audit department which does audit, at certain frequencies, surprise audit, is a great deterrent to the fraud. Management certification of financial statements. See, you all would agree when when the SOX has been introduced, when the CEO, CFO has been asked to certify, then suddenly the quality of controls, quality of reporting, quality of numbers has increased. Similarly, when the clause 49 has been introduced in India and the CEO and CFO has been asked to certify, again we saw this jump in the quality of the numbers, quality of the controls, transparency in the controls. Huge improvement it has happened. External audit of internal controls over financial reporting. Now, with this IFC, this too happens. A number of company also get their IFC audited from a third party. And depending on the company, it's actually a good practice where you're asking a third party to challenge your internal controls. Management review. So wherever a management performs a review of the financials, review of the operations, they are in a position to find, detect, ask questions. And when they are asking question, it reduces the opportunity or the threat of fraud. If your company is ISO 9001 certified, then as part of that certification process, you also need to perform management review of the ISO processes. So I believe it's a fantastic opportunity to do perform that management review and identify any looking in the processes. Hotline. Globally, if we consider the various sources of identification of fraud, then hotline will come on top. This would come on top, on top, even internal audit will come afterwards. There are so many tips been given and received on hotline, and which has resulted into fraud being identified or some course correction has been taken in a timely manner. It's a fantastic. This gives an opportunity to any third party related, unrelated employees, vendor, customer to report any wrong thing which they believe is happening in the company. Independent audit committee. Wherever there is an independent audit committee, the directors would bring their own perspective and ask questions. And when they are asking these questions, then automatically the risk of fraud reduces because management knows that somebody is going to ask the question and they need to have an appropriate answer to that. Anti-fraud policy. So this is the written commitment by the organization that they commit to anti-fraud. They also establish certain checks and balances to reduce the risk of fraud. Besides this, there is employee support programs. What is employee support program? You may have some employee who is addicted, to maybe alcohol or who's facing some challenges. It can be personal, emotional, mental. So wherever there's a support program is there, So it brings certain people, and it so this creates engagement, as well as it reduces the risk that somebody can manipulate those employees. Fraud training for employee. When you give this fraud training to employees, you basically mandatory vacation. Again, fantastic way to control fraud. When you give mandatory vacation, this is especially prevalent in financial industries where some people have been asked to go on leave for 21 days. Idea is twofold. One, if some mischief is being conducted, organization may be in a position to identify that mischief, but at the same time, it forces the function, department, processes, people to ensure that there is adequate backup, there is adequate succession, there is adequate continuity, which allows the work to go on unhampered, and rewards for whistleblowers. Some people, there is a hugely, it can be a debatable thing, but wherever there is a reward for whistleblower is there, is incentivizes some people to raise the whistle. Of course, people may have their own opinion. Some may have opinion that if say- if they are seeing something wrong, they are supposed to report it. They should not be reporting for the purpose of gain. But it is your choice. Is a organization choice what they want to do it. Of course, there are some more anti-fraud controls like segregation of duties, dual signatory to an approval of senior where beneficiary is subordinate, yearly affirmation to code of conduct, conflict of interest. Uh, this third one, approval of senior. This is also called grandfather approval for grandson. For example, you as a manager can decide to take some kickback for promotion or increment of your team member. You can do that. What is the control? The control is whatever you are proposing need to be approved by your manager. So this gives the other person opportunity to understand the teams better and also to tackle such kind of risk. Dual signatory, it happens by default in large number of corporates. Is also maker checker. So this is again very important control. Now, if wherever if fraud is happening, one of the reason would be key it is in some area, some activity, something where only one person is looking into it. The second person may not be looking into it. Now, yearly affirmation to code of conduct. So let's say I have given confirmation today that there is no conflict of interest. But what about tomorrow? Tomorrow it is possible that I have had my son in my team, which is creating a conflict of interest, and I'm not declaring that, which will be a wrong thing. So yearly affirmation to code of conduct, conflict of interest, in my opinion, should be there. Of course, it also depends on the organization philosophy, what they want to do it. But it's a good anti-fraud control. How do internal audit detect and deter frauds? So, so this is a fraud detection and deterrence cycle. So it's a simple plan, do, check, act. So plan, when you do risk assessment, include fraud risk. When you creating a plan for you're creating an internal audit program, checklist. Uh, Incorporate the risk and controls for fraud risk. If the controls do not exist, that itself is a finding. And if it exists, you need to test that. You need to check the existence and effectiveness of those controls. And wherever something is not working or something is required improvement, then you need to act. So it's a simple plan, do, check, act. Of course, in internal audit, in anything, this is what happens. This is a simple cycle. So you do it once, repeat it, repeat it, repeat it, and every time you try to improve on the work you have done as compared to last time. So how you can identify areas? Of course, one is a risk assessment. We are specifically testing areas for fraud risk. Another is cash. So wherever there is a cash being handled, there is a risk of fraud. Let's take a retail company. So even a retail company where the stores would be carrying or collecting cash from customers. And we have second and fourth Saturday off on the bank. So Friday sales, Saturday sales, and Sunday sales. These 3 days sales, it is a great opportunity where a person can take away the money, not deposit it. So this is a great way to steal the money. Large volumes. Wherever there is a large volume, the perpetrator of fraud thinks that let me do something for some bit of transaction, some bit of volumes. Of course, so wherever there is a large volume, it may, sorry, so it may be prone to fraud. Not necessarily the fraud is being conducted. Excuse me. Yeah. External interfaces. So whoever in your system faces or meet people from outside, and who would they be? They would be your sales staff meeting the customer. They would be your purchase procurement staff meeting the suppliers. They may be your the people who interacts with the say external stakeholders, for example, regulators, government officials, and other. So whenever the touch point is there, so based on the touch point, the different types of fraud can be happening. And once you identify what are the external interfaces, you can work on the type, what are the types of anti-fraud control is required. Dealing with government. So all the department who deals with the government and government requires many times something under the table. So again, so that would be another area which is prone to fraud. Past frauds in the organization and the industry. So remember that knowledge how a fraud can be happening. So an auditor when getting appointed, even as an in-house auditors, they need to have a they need to have a deep understanding on how a fraud has been committed against the organization in the past and how the fraud has been conducted in the past or is getting conducted in the industry. This will help them to identify, define appropriate anti-fraud controls as well as the monitoring mechanism to detect frauds. Small team sizes. Small team sizes means less segregation of duty or no segregation of duty. Wherever segregation of duties are not there, it leads to control of the entire transaction. Unstable functions. If your finance is unstable, people they are leaving the job very often, high attrition rate. Then if somebody commit fraud, goes away, how we will come to know? Because the function itself is not stable. So any unstable function requires close to monitoring whether anything untoward is happening in that particular function or not. Now I have added certain case studies. For example, LECO pricing guideline. So these are perfect example how you as part of internal audit can work on the fraud risk management. So first situation is there's a multi-geography organization. So they had a distributed organization and all the purchases were happening locally. So they were having no price masters. So no item master, there are no pricing guidelines, no approved vendor list. And a single person at respective locations have authority to purchase. So this particular organization, they had almost 10,000 locations across the geography, and 10,000 people were used to purchase. And you are asked, then when you are doing that, you will find that, for example, somebody would be a great negotiator and they would be negotiating and getting a good discount. Somebody is a bad negotiator. They are not negotiating. So how do you know which price is the right? It is possible that if there is a change in the person, the next person who went has not negotiated, given the MRP and come back. So in this, you don't know whether the person has actually paid the full money or pocketed the money. So if you have, let's say, approved vendor list, you have approved price list or contracts. If not price list, then you can have a pricing guidelines that price of this particular item is between so and so. Item asset controls, so that this is the approved items and dual approval for item outside the approved vendor. Now, if you have approved vendor, you can fix up the rates with them. If you don't, if something is getting purchased outside those lists, then you process can ask for an additional review and authorization to ensure that the person is exercising appropriate prudence in the transaction. So once this has happened, then the variation in price and cost got eliminated. The fraud alerts has been reduced. This is a simple control. Now, once you build this control, then automatically you would also be in a position to save some money for the organization. And another organization, they have the assets spread over very large geographical area. In this particular organization, the accounts payable team, they had access to create vendor master, asset master, they can create purchase, they can create GRN, and they can release payment. So they have full control on the entire process. So once it has been identified, the control has been put in place. So there was a separate master creation team got created. The segregation of duty has been brought in between PO issue, GRN, invoice matching, payment release, and yearly fixed asset verification started. So with this, the number of fictitious assets which has been identified during physical verification has been eliminated, and the risk has been eliminated. Now, lack of management review. In this particular organization, they had multiple bank accounts, but they had a unique scenario. They used to create bank reconciliation only for the operating bank accounts. So they didn't used to make the bank reco for the non-operating accounts. So if we are not doing a reconciliation, then only once in a year at the year end, they would be going for asking for the balance confirmation, and the bank account would be at risk for the entire year. So what action has been taken? First, if there is a bank account, then it has to be reconciled, whether it is operating, non-operating, not, it has to be done. If they don't want to reconcile, then they better close down that account. Then reconciling items which were found that has been cleaned up, written off, and accounts which were closed off were actually closed with proper documentation. So this has, also cleaned up the books as well as reduced the likelihood of committing a fraud in the non-operating account. Of course, it has also freed up a bit of working capital. Now, this is a conflict of interest scenario. So typically, what company does, company creates generally company wants to have 2, 3 vendors. Idea is that they are not dependent on one single vendor. There is a backup vendor is there. So in this particular organization, a couple of vendors have been introduced, but at the same at that while bringing the person has not performed appropriate due diligence. Now, when internal auditor has was doing the verification, what they've identified that these two vendors are operating from the same location, same building, same floor. When they raise this, they realize that these two vendors are basically the two brothers. Now, if this fact is known, then the company would have taken that, okay, there is a new vendor is there, but we need to still look for another vendor. So after that, there was a mandatory vendor due diligence has need to be done, and the appropriate person need to sign off on those due diligence. Vendor need to give mandatory declaration on the conflict of interest. And just to be on the safer side, the company has introduced the reverse auction. So this has eliminated the risk as well at the same time also reduced the prices. Especially company has, in this particular case, company has onboarded a vendor, which has also helped them got additional vendors. So it was pure, the risk got eliminated to great extent. Again, lack of management review. In this particular scenario, company used to sell something on the online portal, and they used to pay commission to their sales staff on the secondary sales. But what was happening is the sales staff only used to download the files from the portal, calculate the commission. Now, it's like you are responsible to decide what commission you should be getting, and there is no review which was happening. So whether now it is up to you, you can say 2%, you can also make it 12%. So once the auditor has identified, they have brought maker and checker. They have created another team who used to download this information, not the team which is responsible for selling. Fraud awareness. So in another retail company, a company was facing some issues on fake notes. So this is pre-demonetization. So what they have done is they have told their showroom managers that they can go for fake note detector machine. It's such a simple tool. So with that machine, they are able to reduce the fake note instances to a great extent. And also, what company has done, company has made the employee responsible. That so they need to use the fake machine, and if they are not using it, then they need to personally pay in case of any fake note get detected. Management override. So in a software company, what they have done, so at a particular point of time, they needed to increase the revenue. So they had a TNM, they had the fixed bid contracts. In fixed bid contracts, what happens? So there is a delivery of a product, and afterwards, there is an extended period of time in which the maintenance of the product is being performed. So what the company has done, they have broke a contract into two parts. One part is the fixed bid, and there is a TNM. TNM is for the maintenance. So once they have done that, they are able to accrue a large portion of their revenue project value as revenue once the project has been delivered. And it led to substantial accrual of income. And they have not discussed this change of policy with the board. So once they have done that, once the auditor has identified, then the guidelines has been specified under what scenario a project can be split, at what point it can be split. And this has created a policy, and with this, the com- the future revenue become much more predictable. Now, single person giving an order. If a single person is giving an order, then what is the due diligence the person is performing? Three quotations, price discovery, vendor background check. So since there was only single person was involved, then auditors come out that the award to the company was more than 50% higher as compared to the next best effective options. Of course, the auditor were not able to establish that the person has made the money, but uh, if there are items where only one person is involved, how it can be happening? It should not be happening. If there's a procurement, if there's appropriate guidelines, who will approve, second approval, then such thing wouldn't have happened. So this in a way we have covered earlier when the reverse auction has been introduced, which has led to saving as well as reduction in the conflict of interest cases. Job rotation. This was again was in very much in news for for few years back, where somebody in the bank was issuing letter of credit. He has not taken vacation, not rotated out of the job for a ad number of years, and no one has pointed out. But once a customer has defaulted, then when the area was getting audited forensically, they realized that the person was not rotated out of job for last 10 years. And the bank had to suffer huge losses. Of course, internal audit could have find that out, who has not been rotated at such a responsible position. So what we are doing is, in my organization, we are holding people accountable for fraud. Of course, it's not the blame game. It's what a person is able to exercise their brain. If Common says that "Ki it should have been prevented, then they should have prevented it." We don't accept excuse that we are following a process. For example, a company may have department heads. Why the department heads has been appointed? They have, they have been appointed, of course, to ensure that everything is in order, that is following the process. But they have been also appointed for their ability to exercise the professional judgment. Now, they cannot take a shelter behind that we are following a process. They are supposed to exercise their judgment as well. If they are not comfortable, then they cannot take that excuse. We we say if you say something wrong, please raise your voice. If you don't raise your voice, then you become accessory to that something which is getting wrong. We also take action. It can be penalties, fine, termination of employees. We give training. There's a mandatory training given every year to all the employees. We do mystery shopping. Mystery shopping allows us to understand what is happening on the store front, animal practices. We keep our ears on the ground. So we also take feedback from the ground so we know what is happening. Now, business is decision maker, but everyone is answerable to internal audit. And this is a message that companies' top management is giving time and again to everyone. That they can take a decision, but they are answerable to internal audit. So which creates appropriate atmosphere. So as long as they have appropriate justification, documentation, due process, they can take a decision whatever is right according to them, but they need to still answer to internal audit and provide appropriate explanation. Now, this is an example. For example, code of conduct. Does it exist? Is it comprehensive? For example, does it cover personal conduct of employees, anti-corruption bribery, compliance with competition laws, business part relation, workplace standard, corporate responsibility? Is this communicated to people, employees, customers, suppliers, stakeholders, website, everyone? Does it cover all? How do you ensure that all people understand it? If your organization is operating throughout India, how do you ensure that the people in, say, Chennai understand as well as the people in, say, West Bengal understand it, or Guwahati understand it? You need to take an effort. If required, you need to translate into their language to ensure that they understand it. How do people confirm that they adhere to it? We need to have a system to ensure that they are in a position to periodically confirm that they understand it. What happens when someone violates it? Do you take action? This action being communicated to all the people that we saw something wrong, we have taken action. Is there a process to clear doubts? And how does management show deterrence? So this is one way you can do all those audits, etc. How does presence of anti-fraud controls relate to median loss? So the research says that wherever the controls are there, the median loss reduces to half. So a no tolerance policy and proactive implementation of anti-fraud controls can help reduce median loss for your organization. And what are those controls? This is what we have discussed earlier: code of conduct, internal control, internal audit department, external audit, hotline. So if you have these controls, then it is your risk get reduced. The loss you may incur in case those are not there get reduced by half. In some cases, it may be more than half. So in nutshell, So internal audit needs to, one, have knowledge of evaluating the fraud risk, two, have knowledge how organization is managing the fraud risk. Three, consider the possibility of occurrence of fraud risk. And four, must test for possibility of fraud risk and test controls to prevent fraud risk and report fraud risk. So if you are taking a new engagement, you need to also understand how the industry, how the fraud in industry happens. What are the drivers of fraud in the particular industry? Internal audit is one of the agenda item in audit committee meetings. Now, fraud is not the agenda item in audit committee meetings. If it happens, yeah, visual mechanism is there, hotline is there, but internal audit, it is always there. Internal audit reviews high fraud risk areas at frequent interval and thus better place to identify fraud. Almost everyone's internal audit plans follow 3 year cycle, high, medium, low risk, high risk every year. So they keep doing those area audit frequent interval, keep testing those controls. So they are in a better place to identify fraud. A regular review helps detect fraud early, leading to lesser median loss for the organization. If you do regular review, you can't be doing regular forensics audit, but you will be doing regular internal audit, regular internal control testing. So which will help you to reduce the median loss. With this, I'm at the end of my session. So what did I discuss that you want to know more about, and what did I not cover that you would like to know? So I'm happy to take questions at this point of time.
Sir, we will take the questions soon, very soon.
हाँ जी.
Sir, there are 2 or 3 questions. First question is, what are the potential fraud risk area in a construction company?
In a construction area, construction industry, uh, the few fraud prone area which I can identify is now construction is largely in India is controlled by the entities who are unorganized players. There are very few organized players. So this unorganized players, there's a lot of cash is involved. So the very few people the who handles the cash and all those are related to the basically the owner of that company. Now considering this a large amount of cash is involved, the area which is fraud prone is one when you raise purchase order, have you raised the purchase order at the right prices? That is, are we buying the item at the appropriate prices or not? Secondly, when the goods are coming to your site, what are the controls to ensure that the goods is coming in full? Then third would be that somebody is not pocketing, siphoning, stealing the goods which has come to the site. Because once the goods has been put to use, it would be difficult to understand how much has been put to use or how much has been consumed because now those are in the shape of some pillars, some walls, and typically, now I'm not saying all, but typically internal auditors doesn't have the technical expertise. They need to depend on the technical expert. So the purchases, goods keeping, stock keeping, is one usually fraud prone area. Secondly, this cash which is getting handled. So cash is getting handled, from the customer. Then how do they account for it? Of course, they are not accounting for it, but you are auditing that area. So you need to take appropriate precaution to ensure that you don't get caught on the wrong side. Similarly, they would be giving. Again, they need to ensure that you don't get caught on the wrong side. Now, people when they handle cash, how do we ensure that they are not taking something? Because once the psyche happens that we can do this, then the same philosophy can also be taken further into other areas. Your labor. Now, the it's unorganized labor, not dedicated labor. So they may be hiring labor from a corner and employing them, giving them daily wages, which is in cash. So they would be giving, say, $200. How do you know they have given $200, not $100 to them? So wherever cash is there, there is a huge potential of, for fraud. Of course, so these are some very broad area. Then you can go on and go on.
The second question is, how can we specialize in internal audit field?
So you need to see okay. So I have done enough couple of years in a statutory audit, and then I come into internal audit field. So see, specialization is something which you need to develop. So you won't get rent, you need to develop it. There is a concept called deliberate practice. What is a deliberate practice? Deliberate practice is when you are performing an activity, you are deliberately try to improve upon a facet of that activity. You all would have heard about Kaizen concept, a small continuous improvement in the process. Something similar, it has to be deliberate practice that you are focusing on continuous improvement. Now, and I am just trying to differentiate between statutory audit and internal audit. I may be wrong, it is my opinion. So in statutory audit, it is more about whether the documentation is there or not, whether the approval is there or not. In case the approval was later on obtained, then it is perfectly okay for statutory audit. Of course, they will give a memo to the management that you need to improve upon that process. But internal audit would say, ki, na, how you can do that? You cannot do that. You need to follow a process every time, 100% of the time. And they keep finding ki, how we can improve the process. So this mindset, ki, how we can improve upon the process, thinking back, going back, passing the time, how that thing has happened, how it should have happened, what need to be done to prevent this kind of thing is happening again and again. So can it be developed? Yes, answer is yes, it can be developed, but you need to deliberately practice it. And only if once you start practicing it, you will realize ki what you need to do to specialize in that particular area.
The third question is systematic. This can there be fraud related areas to look for while auditing a quality assurance function?
So now, let me give only a couple of words. Volkswagen, the German-based automobile, how they have committed fraud by manipulating the quality processes. The PUC sticker. It used to be such a simple process. Earlier you go to them, they used to insert one pipe into your exhaust line, and based on that they used to give reading. But today this says ki you need to, they take the screenshot of your vehicle number, they give photography for vehicle number. They ask you to, accelerate, cross certain threshold in terms of RPM. What is this? Somebody has done some fraud in the quality, and that is how it has happened. Now, let's say pharma. So there is a quality department, but some big shot says, please clear this thing. I will give you increment. So what is this? This is fraud only. Of course, the internal fraud. Now, when you receive the goods, the goods get quality tested. So somebody can manipulate there and pass the goods even if it's not meeting the specified quality. What is this? This is fraud in quality assurance only.
So that's all for now.
So I will just take one slide. Again, I go back and take one slide because I think I have not emphasized that appropriately. So, so whenever you meet people, discuss with management in conferences, you keep hearing where are the internal auditors? Of course, when you hear this is preceded, subsequently narrated, something went wrong, especially fraud, some fraud has happened, and they are asking where are the internal auditors. When you have been taken to the court will ask you one thing. Are you professional? You will say, yes, I am professional. Do you follow standards? You will say, yes, I follow the standard of this institute. And they will ask you, for example, do you follow standards on internal auditing, which is issued by your institute? And if you are able to give them that assurance that, yes, I have followed all the standards on internal auditing, though it is a recommendatory, but I have followed all the standards, you would be able to demonstrate that you have taken appropriate professional due care and you are not negligent in your duty. So, of course, when you do all those things, fraud risk, another risk, you are also able to demonstrate to your management that I have taken care, I have reported, and you have not taken corrective action. So don't tell me where was internal auditor. I have reported. It is you who has not taken appropriate action, which I am reporting in my action taken report to you, or action taken the reporting to you. So I believe the adherence, following of standards are at most important as we all are professionals. Yeah. So we can conclude. So this is my email address. This is my LinkedIn address. If you have any questions, any clarification, feel free to reach out to me on email or on LinkedIn. Thank you. Thank you once again, ICI, for giving me this opportunity.
So thank you, sir. Thank you for now. We thanks to all the participants and the speaker, probably the board officials for um, uh, making such a fantastic webinar happen. And so that's all for now. So good evening to the speaker and all the participants. Thank you, sir.
Thank you.
We may close for now. Javier, you can close.